Stop right there. I know exactly why you're here. You're staring at that email from Robinhood, or maybe you've already downloaded the PDF and it's labeled 1099 Composite. And your brain, bless its heart, is doing that thing where it tries to simultaneously understand what it is, why it exists, and how it's going to complicate your life. You feel that little knot of anxiety in your stomach? That's totally normal. Tax season, especially when you're dealing with investments, can feel like you're trying to decipher ancient hieroglyphs while someone's yelling a countdown in your ear. But I want you to take a deep breath with me, right now. Because I'm here to demystify this entire process, to be that friend who breaks it down without the jargon, and to save you from the potential headaches, penalties, and sleepless nights that can come from misunderstanding this crucial document. This isn't just about filling out a form. This is about protecting your financial future, understanding your responsibilities, and making sure you don't pay a single penny more in taxes than you absolutely have to. Here is the reality. Your Robinhood 1099 Composite is not just a tax document. It's the tax document for most of your trading activity with them. And understanding it, truly understanding it, is non-negotiable if you've been buying and selling stocks, ETFs, or even dabbling in options. Let me explain why this matters with an urgency that I hope resonates deeply with you. First, let's tackle the name, 1099 Composite. What does composite even mean in this context? It's not some fancy new tax form from the IRS. It simply means that Robinhood, like many other brokers, has bundled several different types of 1099 forms into one convenient, albeit sometimes overwhelming, document. Think of it like a greatest hits album for your taxable investment activities. Instead of receiving a separate 1099-B for your stock sales, a 1099-D IV for your dividends, and a 1099-INT for any interest you might have earned, Robinhood combines them all into one master document. This is designed to simplify things, but if you don't know what each section represents, it can feel anything but simple. The most common forms you'll find tucked inside this composite are the 1099-B, the 1099-D IV, and occasionally the 1099-INT. Each of these tells a different story about your money, and each requires your attention. Let's dive headfirst into the beast that is the 1099-B, because for most Robinhood users, this is where the real action and the real potential for mistakes lies. The 1099-B, or proceeds from broker and barter exchange transactions, is where Robinhood reports every single sale of a security you made throughout the year. And when I say every single sale, I mean every single sale. Whether it was a stock you held for 5 years, an ETF you bought and sold in a week, or an option contract that expired worthless. If there was a sale or a disposition, it's on this form. This is crucial because the IRS wants to know about these transactions to determine if you made a profit, a capital gain, or incurred a loss, a capital loss. Now, here's a common misconception that I see trip up so many new investors. I only made a small profit, or I actually lost money, so I don't need to report it. Stop right there. That thought process is a direct path to an audit or penalties. The reality is, if Robinhood reports a sale to the IRS on your 1099-B, you absolutely must report it on your tax return, even if it was for a loss, especially if it was for a loss, because those losses can often be used to offset other gains or even a portion of your ordinary income. Imagine you're a college student just dipping your toes into investing. You bought a meme stock for $100, watched it jump to $120. If you don't report it, the IRS sees $120 of unreported income and assumes it was all profit. Or even worse, they flag your return for inconsistency. The consequence of getting this wrong isn't just a slap on the wrist. It can be penalties, interest, and the immense stress of dealing with a tax notice. The solution? Every single transaction reported on your 1099-B needs to find its way onto Schedule D and Form 8949 of your tax return. Your tax software will usually guide you, but you need to understand what you're looking at. The 1099-B will show you the proceeds from the sale, the date you acquired the security, the date you sold it, and most importantly, the cost basis, what you originally paid for it. This cost basis is your lifesaver. If it's missing or incorrect, you could be overpaying taxes dramatically. Next up, let's talk about the 1099-D IV. This section of your composite form reports any dividends and other distributions you receive from your investments. If you hold stocks that pay regular dividends or ETFs that distribute income, this is where you'll see it. This isn't just free money that magically appears in your account, it's taxable income. The 1099-D IV breaks down dividends into different categories: qualified dividends and ordinary non-qualified dividends. This distinction is incredibly important because qualified dividends are taxed at the lower long-term capital gains rates, which can be significantly less than your ordinary income tax rate. Ordinary dividends, however, are taxed at your regular income tax rate. Imagine you're a retiree relying on a portfolio of dividend-paying stocks and ETFs for income. You might think all dividends are treated the same. But if you have a significant portion of your dividends classified as ordinary, your tax bill could be much higher than you anticipated. The common misconception here is that all dividends are taxed equally, or that if you reinvested your dividends, they aren't taxable. Wrong on both counts. Whether you received the cash or immediately reinvested it back into more shares, that dividend income is taxable in the year you received it. The consequence of ignoring your 1099 BIV is underreporting income, which again can lead to penalties and interest. The solution is straightforward. Report these dividends on Schedule B of your tax return, or directly on your Form 1040 if the amount is small enough. Your tax software will usually handle the classification, but you need to verify it. Then there's the 1099 INT, reporting interest income. While less common for the typical Robinhood user than the 1099B or 1099D, it can still appear on your composite. This would typically be for interest earned on any uninvested cash you might have in your brokerage account, or perhaps from certain types of money market funds. The misconception? My cash just sat there and barely earned anything. Even small amounts of interest are taxable. For a freelancer who keeps a significant emergency fund in their brokerage account, that interest can add up. The consequence of not reporting it is, you guessed it, unreported income. The solution is to include it on Schedule B or your 1040. Now let's talk about accessing this vital document. Robinhood typically makes your 1099 composite available by mid-February each year. However, and this is a critical warning I want to yell from the rooftops, do not rush to file your taxes the moment you see your 1099 become available. There is a very real possibility that you might receive a corrected 1099 composite later on, sometimes even into March. This can happen for a variety of reasons. Perhaps a late reporting from a fund, an adjustment to a dividend, or an error discovered by Robinhood. If you file your taxes with the initial document and then receive a corrected one, you'll have to file an amended return Form 1040-X, which is a headache you absolutely want to avoid. Amended returns can delay your refund, complicate future filings, and just generally add stress. So my urgent advice, patiently wait until at least the first week of March, and ideally confirm with Robinhood that there won't be any further corrections before you finalize your tax return. You can usually find your 1099 composite within the Statements and Documents section of your Robinhood app or website. Take your time, download it, and save it securely. Let's zoom back in on the 1099B specifically, because this is where the most complex issues often arise. Two words that strike fear into the hearts of many investors: cost basis. Your cost basis is essentially what you paid for a security, including any commissions or fees. It's the number that, when subtracted from your sale proceeds, determines your gain or loss. The 1099B will indicate whether the cost basis is covered or non-covered. A covered security means Robinhood reported the cost basis to the IRS. This is ideal because it means the IRS has the same information you do, reducing discrepancies. A non-covered security means Robinhood did not report the cost basis to the IRS. This often happens if you transferred shares into Robinhood from another broker, and the original broker didn't provide the cost basis information. Imagine you transferred 100 shares of XYZ stock from an old brokerage account to Robinhood. If Robinhood doesn't have your original purchase price, your 1099B might show NA for cost basis. If you then sell those shares and you report the full sale proceeds as your gain because you forgot to manually input your cost basis, you're going to pay way more in taxes than you should. This is a nightmare scenario. The consequence is overpaying taxes, potentially thousands of dollars, because you didn't have accurate records. The solution? You are personally responsible for tracking the cost basis of non-covered securities. Keep meticulous records of your original purchase confirmations. If you discover a missing or incorrect cost basis, you must correct it when you file your taxes, typically on Form 8949. Don't assume your broker always has it right. Always double-check. And then there's the dreaded wash sale. Oh, the wash sale. This is a rule that catches so many active traders off guard, and it can have significant tax implications. A wash sale occurs when you sell a security at a loss, and then, within 30 days before or after the sale, you buy a substantially identical security. The IRS views this as you trying to artificially create a tax loss without truly changing your investment position. The consequence? The loss from that sale is disallowed for tax purposes in the current year. Instead, that disallowed loss is added to the cost basis of the newly purchased shares. This means you can't deduct the loss now, and you'll eventually realize it when you sell the new shares. Imagine you're an active trader, and you bought stock A for $100. It drops to $80, and you sell it, realizing a $20 loss. Feeling like you missed out, you buy stock A back for $85 just 2 weeks later. Robinhood's 1099B will report this as a wash sale. That $20 loss you thought you had? It's disallowed. If you have other capital gains you were hoping to offset, you just lost that opportunity. This can significantly increase your taxable income. The solution is to be acutely aware of the wash sale rule. If you plan to sell a security for a loss, make sure you don't repurchase it, or a substantially identical one within that 61-day window, 30 days before, the day of the sale, and 30 days after. Your tax software will often try to identify wash sales reported by Robinhood, but understanding the underlying principle is key to avoiding accidental tax traps. Let's also quickly touch upon short-term versus long-term capital gains and losses. This distinction is critical for your tax bill. If you hold a security for 1 year or less before selling it, any gain or loss is considered short-term. If you hold it for more than 1 year, it's long-term. Short-term capital gains are taxed at your ordinary income tax rate, which can be as high as 37%. Long-term capital gains, however, are taxed at preferential rates, 0%, 15%, or 20%, depending on your income bracket. This can be a massive difference. For a day trader making frequent short-term profits, their tax burden will be much higher than a long-term investor who sells after several years. Your 1099-B will clearly categorize your transactions into these buckets. The consequence of not understanding this: you might accidentally sell a security a day too early, turning a potential long-term gain into a short-term one and significantly increasing your tax liability. The solution? Plan your sales strategically, especially towards the end of the year, to maximize long-term treatment when possible. Now, how do you actually use this Robinhood 1099-Composite with your tax software? Most popular tax software programs like TurboTax, H&R Block, or FreeTax USA offer direct import capabilities for brokerage statements. This is a fantastic feature, and I highly recommend using it. You'll typically log into your tax software, navigate to the investment income section, and it will prompt you to connect to your broker. You'll enter your Robinhood login credentials, and the software will pull in all the necessary data from your 1099 composite. This saves you an immense amount of manual data entry, which is prone to errors. However, and this is a crucial however, do not blindly trust the import. After the import, take the necessary time to review the imported data against your actual Robinhood 1099 composite PDF. Look for discrepancies. Are all your transactions listed? Is the cost basis correct, especially for any non-covered securities you might have adjusted? Are wash sales handled as you expect? Sometimes, especially with complex transactions or if there are corrected 1099s involved, the import might miss something or misinterpret a data point. If you encounter issues, or if you prefer to be extra cautious, you can always manually enter the information. Yes, it takes longer, but it gives you complete control and forces you to look at every single line item. The common error here is simply clicking import and moving on, assuming everything is perfect. The consequence? An inaccurate tax return, potential underpayment or overpayment, and the dreaded IRS notice. The solution is vigilance. Treat your tax software as a helpful assistant, not an infallible oracle. Let's talk about some common pitfalls beyond what we've already covered. One big one is confusing crypto with stock trades. Robinhood Crypto is separate from Robinhood Financial. If you traded cryptocurrencies on Robinhood Crypto, you'll receive a separate 1099-B specifically for your crypto transactions, because crypto is treated as property by the IRS, not a security. Do not try to merge these or assume they're all on one form. Another pitfall is ignoring the document altogether because you think your gains are too small or you actually had a net loss. This is a fundamental misunderstanding of the tax system. All sales must be reported, even if you lost money. You want to report those losses because they can offset other capital gains. And if your losses exceed your gains, you can deduct up to $3,000 against your ordinary income each year, carrying forward any remaining losses to future years. This is a valuable tax benefit you'd be throwing away if you ignored your 1099 composite. Let me take a moment to address different demographics, because while the rules are universal, the impact and typical mistakes can vary. For the new investor or student who just started trading on Robinhood, I know this feels overwhelming. This is probably your first encounter with investment tax documents. You might have only made a few small trades, maybe even ended the year with a loss. But please pay attention. Those small transactions still generate a 1099 composite. Don't let the small size lull you into a false sense of security that the IRS won't care. They will. Use this as a learning opportunity. This is how you become a responsible, financially literate adult. The biggest mistake I see here is simply ignoring it because it's too complicated or too small. Don't do that. Your future self will thank you. For the active trader or day trader, your 1099 composite is likely going to be a multi-page behemoth. You'll have hundreds, maybe thousands of transactions. Wash sales will be a constant companion. Your biggest challenge is accuracy and organization. If you're using tax software, the direct import is a godsend, but your review process needs to be even more meticulous. Consider using specialized tax software or a tax professional who understands high-volume trading. The consequence of error here can be enormous, leading to significant under- or overpayment of taxes and a high likelihood of an audit. For the dividend investor or retiree, your 1099 DIV section is likely more prominent. Focus on understanding the difference between qualified and ordinary dividends, as this directly impacts your tax bracket. If you're living off these dividends, accurate reporting is paramount for your financial planning. Don't forget that even if you reinvested your dividends, they are still taxable in the year they were received. For the set-it-and-forget-it investor, you might only have a few transactions, perhaps some ETF dividends and 1 or 2 sales over the year. Don't assume your tax situation is simple enough to ignore this document entirely. Even a single dividend or a single sale generates reporting requirements. Check for those small amounts, they add up, and the IRS sees everything. I know this is a lot to take in. I know your head might be spinning. Tax season already brings enough stress, and adding investment documents on top of it can feel like the straw that breaks the camel's back. But I want to empower you. You can do this. This isn't rocket science, it's just a process that requires attention to detail and a willingness to learn. Don't let fear or procrastination lead you to make mistakes. The biggest mistake you can make is doing nothing, or filing an inaccurate return. Your Robinhood 1099 Composite is not an enemy, it's a roadmap. It's the official record of your investment activity, and understanding it is your responsibility as an investor. Use this guide, take your time, and don't be afraid to double-check everything. If you genuinely feel overwhelmed after reviewing your document, that's when you consider seeking help from a qualified tax professional. But start by understanding the basics yourself. Download your document, open it, and try to identify the 1099-B, 1099-DIV, and 1099-IN sections. Look at your sales, your cost basis, your dividends. This process gets easier every year you do it, I promise you. So don't procrastinate. Get proactive. Understand your Robinhood 1099 Composite and file your taxes with confidence. Your financial health depends on it.